Hello, ladies and gentlemen. Welcome back to the channel. We are back once again talking about the Walt Disney Company. As I predicted, big week for them over the course of the vaccine announcement. And then obviously now they announced earnings, and their earnings were a lot better than expected. So they're kind of leading the charge in the Dow today. I believe the Dow is up about 300 or 400 points. And Disney's currently at 138, or up about 2.38%. Due to their earnings, Disney shares rise after reporting 73 million paid Disney Plus subscribers. That's an incredible number for the first year. I believe Disney Plus 1 year anniversary was the 11th, I believe, so that was a couple days ago now. Losses not as drastic as expected. And this is kind of what I said. The parks have been doing really well. Or I guess I shouldn't say parks, I should say Disney World's been doing well. They've been doing a good job of keeping things open and functioning, and still social distancing and stuff like that. So that's been a plus. And then also Disney Plus itself is kind of negating some of the losses. It's really, really pulling the weight, their streaming services as a whole. The company exceeded expectations on revenue and showed less drastic losses than anticipated. The COVID-19 pandemic has most significantly impacted Disney's parks division due to local restrictions that have forced temporary closures or limited capacity. Like I said, I think they're doing a lot better than some people initially thought there. Loss per share 20 cents versus 71 cents. That's a major beat. Obviously, it's still negative, but that's up quite the gap there. Revenue of $14.71 billion versus $14.2 billion expected, so a decent beat there as well. 73 million paid subscribers. Shares rose as much as 6% after hours, but pared gains during the executive's call with analysts when CFO Christine McCarthy said Disney would forego its semi-annual dividend in January, which is kind of what I expected. That's smart on their part. They need to just reinvest that money into the company. I don't fully understand companies that are paying dividends right now, unless they're just insane financial positions, which most of them aren't. When you see PE rate or payout ratios of like 90% or higher, they just need to put that money back in the company. I think we can understand that as investors. She said the company would continue with dividends in the long term. I can appreciate that. The decision to pause the dividend came after activist investor Dan Loeb said the company end the dividend in order to fund Disney Plus content. Again, that's a really good decision on Disney's part. Netflix versus Disney streaming subscribers as of most recent quarterly reports for each company. So Disney has 73.7 in Disney Plus, 36.6 million in Hulu, and 10.3 million in ESPN Plus, and then Netflix as a whole has 195 million. So they're slowly catching up to Netflix. Do I think they'll pass Netflix? Probably not, unless Netflix's prices just get too out of control. Disney Plus, and actually all three of these, you can get a bundle much more affordable than Netflix as of right now, and I believe that's only going to that trend is only going to continue. But let's see here. The COVID-19 pandemic has most significantly impacted Disney parks due to local restrictions that have forced temporary closures. Disneyland resorts have remained closed as California restrictions prevent it from operating due to the level of COVID-19 cases. You see, it has been able to reopen its parks in Florida, Shanghai, Japan, and Hong Kong. So there's 4 of them that are open. That's more than I thought there were, with limited capacity. However, Paris Disneyland was forced to close in late October and will not open until 2021. Disney estimated the net adverse impact of COVID-19 on the parks division operating income was about $2.4 billion in the fourth quarter. CEO Bob Chapek said on call with analysts Thursday that Disney is extremely disappointed in California's decision to keep parks closed despite the measures they've taken to keep visitors safe and the staff safe. California's a mess. It really is. And I'm sure you guys know that. California is in a bad spot. But that's kind of to be expected. Our health and safety protocols are all science-based and have support labor unions representing 99% of our hourly cast members, Chapek said. Frankly, As we and other civic leaders have stated before, we believe state leadership should look objectively at what we've achieved successfully at our parks around the world, all based on science, as opposed to setting an arbitrary standard that is precluding our cast members from getting back to work. And it's really sad for some of these people who are employed, who have been furloughed or let go by all this situation. Obviously, you never want to see that. Disney's estimated and in its earnings release that costs related to the pandemic will total roughly $1 billion in fiscal year 2021. Though it said changes to local restrictions could alter that figure. Here's how Disney's segments did in the fourth quarter in terms of revenue. Parks, experiences, and products, $2.58 billion, down 61% year over year. That's a big number, big loss there, but obviously, we expected that. Media network, $7.21 billion, up about 11%. Studio entertainment, $1.6 billion, down 52%. And I think this will be the weakest segment for Disney from here on out. Direct-to-consumer and international, $4.85 billion, up 41%. And this is your streaming and stuff like that. So here's a chart if you want to pause the video and take a look at it. Obviously, the streaming and stuff has made the biggest jump. The studio and entertainment, I guess it hasn't been quite that, big. It doesn't always account for that much in terms of the revenue and stuff like that. Revenue in Disney Studio Entertainment sale. Okay, so we read that due to lower theatrical and home entertainment results, the company had no significant worldwide theatrical releases during the quarter and faced tough comparisons to hits like The Lion King and Toy Story 4, which were released the same quarter last year. We're going to continue reading through some of this stuff, but I believe we are about done. Disney's executives did not offer insight into how well Mulan performed after it was released as a premium product on Disney+. Chapek said the release was met with some controversy, a reference to the movie's credits that thank Chinese groups that have been linked to detention camps in the country. Chapek said Disney would discuss the company's theatrical release strategy more at the Investor Day in December, and that's also when they are going to be releasing Mulan to Disney Plus, or at least that's the plan. I believe they're releasing that December 4th to everybody. I should say, as no longer a paid thing. The fact that they didn't mention it tells me that it didn't do very well. I didn't hear very positive things about the movie. I didn't watch it. If you guys did watch it, let me know what you guys thought about it in the comment section below. But I don't think it was very successful as a whole. Cable networks operating income fell 7% year over year to $1.2 billion. Disney blamed the decline on lower results at ESPN because of higher programming and production costs related to securing rights for the NBA and MLB programming. Programming rescheduled from the previous quarter due to the pandemic. ESPN did see growth in ad revenue, however, due to the shifted programming and the additional week in the quarter. McCarthy said Disney will no longer break out results for the 21st Century Fox moving forward. So that's going to be the rest of that article. Disney is currently at $138.67 per share. Really interesting stock in my opinion. I think it's getting up to the value where it should be currently. In the long run, will it go up? Probably around 150, 160. You could even see it go to 200 potentially. But that is in the long run. That we're talking like 2022, 2023 for some of those things. And anything that inflates it beyond like 150 currently is just artificial. It's just positive momentum is what's causing that, in my opinion. Love Disney, love their company, love their stock. But I think if you haven't been in it already, I think you might have missed the ship on it a little bit here. But I'd love to hear from you guys in the comment section below what you guys thought about the earnings report and current position for Disney, whether you guys own it, whether you guys are going to sell it, whether you guys are going to continue to hold your shares, or whether you guys have actually gone to the park or any of the parks, whether you guys are international listeners or whether you guys have been to Disney World. I'd love to hear from you guys. Obviously it's certainly a little bit different with the pandemic, but any insider information would gladly be appreciated in the comment section below. Hopefully you guys all have a good weekend. like, comment, and subscribe if you did enjoy the video. We're going to continue posting some good content for you guys. And until next time, happy investing.